Good morning, traders. It is Tuesday, the 14th of August, 2018. It's 8 a.m. Chicago time, 9 a.m. Eastern, on another Trader Bite brought to you by Convergent Trading. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market is looking higher. We're opening up across the board. Most indices, except for the DAX, we're opening higher by somewhere between 0.12 and 0.3%. The NASDAQ's leading the pack, up 25 points, followed by the Dow up 68 points from yesterday's settlement. The S&P is up 7. The laggard today is the Japanese yen, down 17 pips. The euro's down 70 pips, 7-0. And the DAX is down 5 points, with the U.S. Treasury note, 10-year note, down a tick and a half, and the bonds unchanged. Looks to me like it's generally a mixed bag. The leader today is crude oil. Crude is pushing 68.14 on the September contract, up almost $1. Trading at 98 cents, up almost a point and a half, 1.5%. That's how things are shaping up this morning. As far as what we're looking for as part of today's releases, what could interrupt our auction today, we did get several numbers this morning: German GDP and CPI, UK ILO employment rate. This was an important morning for the Eurozone, the European GDP, German zoo survey. We did get import prices in the U.S. expected 0.0%. We matched that, and there's nothing really left on deck for the remainder of the day, except for those of you trading stirs or notes. We have a 4-week bill auction and a 52-week bill auction at 11:30 Eastern. So the calendar is not likely to have an impact. So let's move quickly through to our review portion. Yesterday, given the way we were set up, the way the market played out on Friday, yesterday gave us an open that's right on top of Friday's close, right on top of Friday's point of control. I discussed at length yesterday those things that back up and move higher, those things that back up and move lower. And the primary expectation was for us to push higher into that 28.43. And if we do, I was looking for a burst through to 47.75 for the gap mid. And then on the second scenario, I was looking for a test up to 28.40.50, which was a value high, this black line right here. And then an impulse down, which would then take us to the low. Once we take out the low, I expected us to move back into the range. So we would end up just extending the low with a lower low and then coming back into the range, into balance. Here's what actually happened. We got both. We got the test of value high. So we crept up to value high. So that gives us set up for potentially scenario 2 or scenario 1. Scenario 2 looked pretty good here, and then it came all the way back and extended the opening swing high to the upside. The opening swing high is at 28.40.50, down to this 28.35.75, the IB low, which became the IB low, or the low swing in the morning. So it looked like buyers were dominating the move, and they did. We moved through 28.43 as expected. We got to 28.43.50, took it out by 2 ticks, and then it just completely ran out of fuel. I got to say, this move here looked a whole lot like some news event, but I didn't find a news event that would drive this. So I guess it was technical in nature. But we rolled over back to mid, creating an opportunity for potential to continue. And instead it failed. It failed through. I happened to be lucky. I wasn't monitoring this product when this happened. I would have been long. I would have been long that setup. So it failed through. We extend the IB down. So we break through the IB low at 35.75, and just continue to move through to the bottom of the range. So remember the secondary scenario. So the first scenario kind of worked, but it didn't end up following through to 47.75. It just failed right after it broke that prior high. So what we have here is a sort of a failed auction, a two-tick failed auction, and the market just rolled over and went to the other side. Sellers were in control at that point. Notice back here that the profile is kind of boxy. We traded the entire range pretty thoroughly. There's no consensus on price. There was no bell-shaped curve or anything. So prices were traded all the way through. We could see that in the order flow as well. And then it takes out the prior low, bounces back up, and extends the prior low. And as I talked about in scenario 2, once we take out the prior low, I expect it to consolidate and come back into the range. And so that's what I was looking for in here. It ended up pushing the overnight low by 2 ticks. The overnight low is 28.20.50. It pushed that overnight low by 2 ticks and then bounced back up, and it set us up for a mid short here. I discussed this on Convergence Chat. Mid short, and that worked out okay. But despite the fact that the delta kept dropping, the market didn't have much in it to continue to challenge that last low. So we ended up drifting down into the close, into basically a channel which broke to the upside in the overnight session. So yesterday was an early scenario 1, and then immediately switched to scenario 2. The scenario 2 extended farther down than expected. The opportunities for scenario 2, once we got this 10-point rotation down, the opportunities were really you had to be really aggressive to get on the short side once we saw the impulsive move down, and you had to stay off the longs. I did not see this, even though I had a stock zone area down here. This is shifted. I did not see a good setup in the order flow to get long into the mid, but I saw a really good setup in the order flow once it pushed through the mid to the upside. I saw a good setup for a short, and I detailed that through a video online. So that's how we ended up. We ended up shifting the point of control way down. Let's look at how that point of control moved. It was a kind of an interesting drop. This white line is the point of control. So the point of control was way up here, was at this price all day, until about 2 o'clock Central, 3 Eastern. It was at 28.42.50, and it drops hard all the way down into 26.50, and it ends up settling out at 28.25.25, which happens to be the overnight low. The overnight low basically tagged the point of control from yesterday, and continued higher. Okay, so here we go. We open, we move to the point of control, we pop up, and all the attempts, every attempt lower was bought up last night. Volume's pretty good. By the way, yesterday's volume was pretty much in line with what we would consider to be the mode of volume over the last 1,500 days or so. Came out at, I think, 996,000 or 990,000 versus 1.1 million. So there's a fair amount of activity yesterday, a fair amount of participation in the auction, and that's part of a good part of what creates the opportunity. So the overnight session, we have 180,000 contracts traded, and really the overnight trade is to the upside until recently where it started to break lower. The overall delta is positive with the inventory being positive. We are above yesterday's close. So here we are trading above yesterday's close on a positive delta. It seems like the overnight session was dominated by buyers. Okay. So let's see what we've got for today. We don't need these boxes. All right, so here we are. Yeah, Michael's suggesting that the news was Turkey. Turkey's news was going on throughout the session, and there wasn't anything. There was a rumor before the open, which was refuted by the U.S. Embassy in Ankara, but there wasn't anything during the session that was dramatic. I just couldn't find anything in all three of my news feeds. So I think this move down here appeared to be technical. Okay, so this morning we are opening higher, so we closed down here. Okay, we closed, I think, at 25.75. Let me see what the close is. The close for yesterday, 25.75. See that? Not that old. 25.75. We're currently trading at 28.31. A small inside gap. Yesterday's trade was mostly a trend day down. We did not break the IB high. So the only thing we can do is classify it as a trend day down. The expectation this morning is for an open auction. Why? Because we are in yesterday's value. Look out for 33.50 to 34 as the first test area up here. So I'm looking for a push into this area, consolidate, impulse down. I expect the gap to close, and then I'm looking for it to retest this last low we put in yesterday, 28.20. May not make it all the way down here. We had a pretty good taper yesterday on that low, but my primary expectation is that we are likely to continue to push lower, to test lower. Buyers are just not doing a very, very good job keeping prices, keeping pressure on sellers. And so this pop-up is likely to be seen, the fact that we have long inventory, this pop-up is likely to be seen as an opportunity to sell short back into yesterday's lows. That's the primary scenario. Secondary, again, open auction. Looking for it to drift towards yesterday's close. Consolidate in this area. Impulse up. Push into 33.34. Consolidate. Pull back. Hold steady for the morning session. And then in the afternoon, I'm looking for it to drift up and take out this overnight high and start to challenge the area that is balanced for these 2 days. So these 2 days traded on top of each other, and if I put a composite on top of them, a micro composite on top of them, you'll see that 37.50 is the balance in this area. So that's where I'm looking for scenario 2 to be attracted to, and then hold steady in here. Scenario 2 is an inside day. Yesterday was sort of a bearish engulfing day. We took out the prior day's high. We took out the prior day's low. We finished lower. And so it looked like a bearish engulfing day. It's part of what feeds into this primary scenario being down. The secondary scenario is a recovery, and then the third and fourth scenario are breaks and trends in opposite directions. So this is what is shaping up. Anyway, as far as these trader bites, I do hope that I know it seems repetitive and stuff. We are in a repetitive business. Our job is to come in here and assess methodically the process of what the market has done, get ourselves in line with the narrative of what the market is doing, and then take advantage of opportunities where we see an edge. The edge being a higher probability of one thing happening over another. We align ourselves with that probability, whatever method you use. There is no fixed way to trade. There is no fixed way to trade. You have to trade your own way. You kind of have to see what makes sense to you. If you like fibs or Elliott wave or geometry or whatever, just in the end, the purpose of these trader bites is really to reinforce in your mind the fact that as you grow as a trader, and I didn't realize this in my career until later, yes, those little tools and drawing tools and fibs and whatnot, and floor pivots and things like that are good because they tell you when you should interact with the market so you're not trading in the middle of nowhere. But as you grow as a trader and you're putting on size, you start putting on 30, 40, 50, 60 lots, 200 lots, whatever. It's the narrative that's going to keep you in those trades. It's your understanding of what the market is doing on a day-to-day basis that is likely to keep you on the right side of those trades with size. And that's really what I'm covering. So you don't have to be a volume profile trader. You don't have to use these stock zones. You don't have to do any of these things. But the goal is that you're seeing on a consistent basis the same process over and over. And it seems very mundane, but it's really important. It's a lot like a skeet shooter or a sniper following the same pattern when they're taking that crucial shot that could make a difference in today's battle. So this is the point of these trader bites. I've been doing them for 5 years on a daily basis, not every day, but 99% of days in the year, trading days in the year, I'm doing these trader bites. And the goal is not for you to take my ideas of what the scenarios will likely be and find your spot. The idea is to try to align yourself with the way I'm seeing things, and hopefully that's what'll make a difference to you. Okay? Good luck today, and I'll catch you tomorrow morning. Take care.